All right, so we're just going to go over something insanely simple today. And I see this so much during the market open, and we can go over it pretty much here where we'll get into the basics of it. And this is pretty much when these correlated assets, we have an SMT with external range liquidity, which is able to move price to the internal range liquidity. As you can see, this external range SMT moved us to internal range, where we're receiving another SMT that conforms the same, right? This is the weaker asset because it swept the low. Now it is continuing to stay the weaker asset by failing to sweep the high, and that eventually expands us lower. So this is when we see that same, this weaker, and then obviously it's weaker with the expansion lower. And now I want to go into the double inducement, and this is really important, but this is basically how a lot of the days you'll see that long traders and short traders just get absolutely messed up. And so let's say we have a bearish bias. That's going to be today's example. You're on NQ on the 5-minute chart, and you're looking up and you have some bullish targets where you would want to see price sweep so you could get into some trade. You have your previous day high, Asia session highs. There's just liquidity resting above. What happens, right? At market open, well, price blasts higher. Usually we'll take out these targets, as you can see, liquidity swept, and we create this bullish fair value gap. Now, what are we usually doing? I'm not saying this is just for bullish fair value gap traders. Like, there could be a CSD in here, there could be an order block, there could be some sort of fair value gap retracement on a lower time frame, since this is 5-minute, but something gets you into the trade here. Understand that something gets you into the trade here. Now, then what price does is it expands lower, sort of giving you some profit, some false hope. We have some sort of SMT, some divergence at a relative low, some sort of swing that is important to us, as you can see here. And now what do we see? Well, this fair value gap that price created on this leg down that manipulated at the lows, well, this is a valid setup for some people. Now, what am I saying? This could be a CSD for others. It doesn't matter, but like a lot of the times you'll see this bearish setup form, then this bullish setup form off of these lows with this divergence. And what ends up happening is both sides in the end just get absolutely messed up because price continues to trade higher, inverts this fair value gap, or gives you some sort of long entry. So either you move your stop loss back to break even, or maybe some worse traders will flip their bias. Or I'm just talking about two separate traders who one's going long on short, but this is like a bearish bias. But some people will go long off of here, right? You'll be adjusting your position, you'll be going long. Then the last thing that happens is that final crack in correlation where you get that SMT at the highs, or something happen. You know, it doesn't have to be SMT over here. It could be even SMT with like something right here. And that's going to expand lower because we're going to take out these people who tried to go long here. So if you understand that, that's kind of how you're going to miss a lot of this like seek and destroy. This is pure seek and destroy, but it's like an example that I've clearly seen over the time that I've traded.